excited for this video. I'm breaking down the overall markets. We got S&P, the Nasdaq, and US oil. So I just want to bring this up right off the hop, right? This is the low of 2020 when pretty much the pandemic just first hit. And now it's the beginning of 2022. We're about to enter March, and we've gone significantly higher in these markets, right? All markets have gone higher since March 2020. So right now I want to emphasize that this over here is a trader's market. And then over here, what we're seeing, at least the first 2 months of the year, has been pretty bloody. So it's hard to, even if you look back to November, it's been like choppy action. It's not the greatest to trade. There's not a real easy trend to follow for the long side, if anything. So it really makes me think, like, this is honestly so good overall for the market, because like, how much longer was this going to continue? You know what I mean? So right now I want to emphasize that, like, this is the perfect time to really, stock up on your skills, learn about technicals, learn about risk management, learn about different things about the stock market and crypto and other things, because the opportunity will come. It's just a matter of time. Right now it could be weeks, it could be months, but overall, if we look just simply from a Fibonacci retracement perspective, like, it has potential to go lower. I don't think we'll go as low as 3,800, but that is a level that I'm not going to rule out. This is the first level I'm looking at, around 4,100, because that's where we've had previous support back in April 2021, May, and June. So I want to see, are we going to trickle down to that area and potentially get some bounce from there? But again, if we're looking at this, right, head and shoulders pattern, this usually indicates that, we're going to go lower. So that's not a bad thing. If you have a long-term account, it's great for your long-term account. You could be stacking up and going long-term. But as for trading, catching quick swings, it's just not the market for that. So I'm marking out levels I think we could go back to. And just overall, the mindset that I'm switching into is a lot more preservative. I'm trying to lay back. I'm not trading. I am not trading. I am definitely in one position, and that's Galaxy, because I'm confident in their long-term outlook. So that's just the S&P, right? We have this head and shoulders on the S&P, and it looks like it could potentially, if we run the Fibonacci extension from the top to the bottom to here, first target 39.90. So that's potential, right? We could come back down to these wicks around this area. These are the targets for this Fibonacci extension move. So if some fear really gets triggered into the markets and it causes a lot of people to sell, these are the areas I'm going to be looking at. And again, I want to emphasize this. That's not a bad thing. That will create so much opportunity in so many names. It's not even funny. If we look at the Nasdaq, it's pretty similar though, right? Might not be as clean, but we're not, definitely, it's not looking pretty. Like, we're flushing out here since November, right? Choppy action, and now we're starting to get the flush. Now, when we compare it back to the COVID crash, right? This is not a market crash. The crash was 4 straight weeks of pure blood. Every sector, everything was going down. Where now it's been multiple weeks, right? Since November, we've been in a not so great market. And the only thing really running is oil right now, which is interesting, which I'll get into just in a sec. But these are the levels I'm looking at on the Nasdaq. I want to see, are we going to come back to this $13,000 range? Again, of course, markets could just start ripping from here and potentially go to an all-time high. But I think that there's definitely levels we'll have to come back up to 15.1 and beat that on the Nasdaq. We'll have to go back up to 45 and beat that on the S&P. So there's definitely some things we're going to have to do. Overall, the uncertainty in the market it's here and it's present. So I now want to be aware that this could be a lengthy period of consolidation. So when I look at US oil weekly time frame, we're right up to this trend line that was pretty much bringing us back since 2011, right? 1, 2, 3, 4. This is the fifth touch we're getting here. It looks nice. It looks great. We're following this 8 EMA. This is a beautiful trend, right? Since the bottom of 2020. This is the one that's showing us that it's not really slowing down here. So I want to be aware of oil and see a bunch of oil names. Right now, it looks like we're consolidating. We're setting up a clean bull flag pattern right now. So I'm going to start looking at more oil names on a weekly time frame to see which ones look best that are consolidating, that might be getting that breakout in a few weeks, because I think it's coming. We have the bearish volume, kind of not anything crazy significant, and we're staying right above the 8 EMA, creating this bullish flag pattern. So what we want to see eventually is we break up over this trend line above and we back test it, use it as support. That would be a good sign, right? But this is the most bullish industry right now. So it's something to definitely worth paying attention to. So I think a lot of opportunity could be coming in oil names instead of like the traditional stocks that we look at. So that's the breakdown for this week. Peace.